Hello everybody, Matt from Investor Trades, Friday 16th of October. It is 10 past 8 in the evening. It's going to be market close shortly in the US. I'm just going to give you a quick recap video of what's happened in the DAX the last 24 hours, and obviously the prediction that we had in the charts and how it's worked out using the various tools. So basically by the end of this course you're going to know how to do all this second nature, make some plans, make some money. So firstly, yesterday we had this big drop, again using our tools. We had the huge divergence, we had the gap fill at 597, which we discussed, and that subsequently turned out to be the low. So I'm going to talk you through some of how we got from there to here, and using various Fibonacci. So the first thing I do is once I've got the first move up, I put a Fibonacci 100 at the bottom, 0 at the top. And then to find a wave 2, I use a 61.8 to the 90, because a wave 2 can retrace 90%. Okay, so that's the bottom of wave 2. So I can mark on my chart. It's made a higher low now. So I've got a 1, and then I've got a 2. So that's wave 2. Okay. Once I've got that fib, excuse me, I can ignore that, and then I can say, right, well, that means we're starting a wave 3 to go up. So then technically, again, after this first retrace, I look for the wave 1. This would be, so I can label that a 3.1. Okay. And then we're going to do exactly the same for the entrance for the wave 2. So we mark on a chart 61.8 to 90. And, you know, bang, magic, we've got that come in there. So we're going to go a 3.2. And then we need to start measuring for the targets. Okay, so what I'm going to do, just delete that fib because you've marked it out and it's all valid. We want the 100 there. Through here, okay. And I'll do the same for the main wave 2 as well. Okay, so I'll put the 0 there at the bottom of that wave. So effectively, I've got some key areas now where it's probably going to go to. Now, what happens is you mark out for the 261s. Normally, you get this. One of these wave 2s will be going up without getting too complicated on the subdivisions of these waves. We're looking for the 261. So all I do is well in advance before this happens is I mark this area and say it's probably going to go there. Then what I do is, if by magic, I line up the following 2. Okay, so this is arguably all you have to do. And it comes up here, so bang. Look at that today, almost perfection. 5.6 was the high, and we had 50. Okay, so that's the Elliott wave. So I'm going to take all this off now just to show you, not to cloud the chart. Okay, but we know. Okay, I'll leave that top band because that was a level. Okay, that's what we had there. Now, secondly, I say there's continuation patterns here. Okay. But I want a channel. I want to know where the channel roughly probably is going to go into. And again, this is really, really rough. Just using my eye, I want to dissect the middle of the channel. Okay. Now at this point, we don't know that's happening, sort of around here. So, but at this point, we do. We find lots of points. Okay. So on MetaTrader, just copy and paste that. And again, you just play around with it. But you've got these points now. So as I see it, I think that's a wave 1, a wave 2. This is the end of wave 3, and we're looking at a wave 4 here. Okay. I think probably it will come down to this to tie in with this, and I could stick a fib in there to, you know, I'll do that for you now. I could put the fib there, so wave 1 down, put it for the wave 2, or probably an A and a B and a C, and it's probably going to come down to the 1618 extension, which ties in lovely with probably there's some kind of gap there, which was previous resistance. I imagine it'll come down there. Now what I haven't got is a wave 5 target, so I'm just going to double click. Press hold down controls, I double click on MetaTrader. There's 1 point there. So what would normally happen, you can start seeing we're right at the top here. You know, it's a clear uptrend, so we would want to buy the dip to then, you know, look for a potential wave 5 if there is a wave 5 coming up. But that's you can start building a probability picture now. Obviously when it's hitting that top band, which you think is a wave 3, probably do a sideways correction because wave 2 was a zigzag, a sideways down there. Again, before we want to be buying the dip, we want the RSI to confirm that the correction is over. So again, using the minute 5 chart, we can look for the divergence. Again, there isn't anything yet. So this is just some clear patterns. It describes some other ways. If I zoom in, some other patterns which you'll see. Obviously here we had a bull flag, beautiful, bang, came up, and obviously decent rise. So again, bull flag, you use the pole flag to measure the next pole, so it's come up there. Again, here there was question mark, is this a bull flag? If it is a bull flag, then some of the things you can do is extend that line down. Just add this in. Again, we're looking for areas of probability. So we could say, right, well, the 1618 is here. What if this? And we can label it on your chart as you go along. We could do an A, we could do B upwards. B is quite off. Normally the A is impulse, so it goes straight down, or it subdivides into 3. B is pretty much sideways, and then C is the final impulse before you then get the move up. So again, some areas that we'd be looking at, you can mark it on there, whether it comes down here. If it does come down here, we could say, it ties in nicely here. So this area could be where people short. So again, just talking through, people might have thought got 4, so do a 1, a 2 here, a 3, a 4, and a 5. They then think this move down is, the start of the correction, comes down, 1 try, 2 try, and drop. So you might see a lot of people short in here. They get stuck, and then price needs to come back down to these levels. And it's probability wise, you've then got ties in with the retest of this previous descending resistance. You've got the 1618 is there, and it all ties in there. So again, we look at those, think, right, we've got 1, a 2, and a 3, and then we look for some confirmation down here. So if we could get a nice drop into close, not sure whether we will, but if we could, then that would kind of be ideal. And again, it's a Friday night, it's, just for market close, you don't really want to be holding. But again, some really simple tools. Obviously, one of the most powerful ones is using these, finding the wave 2. So we probably think this is that was the reversal, got confirmed by the divergence, comes up wave 1, wave 2, and then there's going to be probably a powerful long wave 3. So again, if we just use the tools, just to show you this all again. Okay, let me just zoom in there, to make sure we've got the right levels. Wave 1. Okay, and there we go. We can see, I think on MetaTrader sometimes you have to be careful when you're doing it. It almost like corrects it for you. There we go. So you can see, it's incredible. The 2 areas there, bang, bang, and it came right up there for the wave 3. So we can probably count a wave 1, wave 2. This subdivides into a 1, 2, probably a 3, a 4, and a 5, extended wave 5. So it goes 1, 2, 3. Again, if I put that there, it may well give us now, that wave 5 may well give us now the target sort of up here potentially. So what we may well see is a drop down, and then maybe we go back up here, and then that would be a completed 1, 2, 3, 4, 5 move up. Then we get a retrace of that move, and again, not going to guess too much here because you need to zoom out and look at bigger time frames, and then up something like that. But the main purpose of this video is just show you some basic tools that we'll be able to use to give you trading with confidence. Again, yesterday's move, it came down here, 597, came all the way up to 957. So really, a few hundred pip move, really low risk. Again, 50 pip stop loss down here. When you have that divergence, you can enter with confidence. Get these 2 double moves here. So main wave 1 and then a wave 1 of wave 3. Put the extensions in. If it goes past this level, okay, so the 261s are normally, we call it a slingshot, normally it will go back up to the 423. So in theory, you can hold just some really nice profits, some really nice trades. Again, all we've done here is simply use trend lines, cut through the middle with your eye, copy and paste them over. Then look for bullish continuation patterns. Whenever you get this, I can see a lot of people shorting this. They see the red candles, they think, after this move, they then suddenly think, right, well, you could argue, if to the inexperienced eye, it'd be a 1, a 2, a 3, a 4, a 5. So lots of people might think this is a 5-wave, end of a 5-wave impulse move. I'm going to short it. They see the red candles, they think, great, I'm in here, and then all of a sudden it takes all the stop loss out and just rallies up. Okay, so that is, and again, you can understand why people, could potentially look to short it. Um, if you don't get the RSI readings on the signal right, then what you could say, and this is where a lot of people will lose money, so don't do it. They could count this, again using the wrong count, and think that they're looking at a small time frame here. What they need to look at, again, you forget what's happening in the middle. You want to use the beginning of the move. You want to look at that slingshot. Where is it taking you? It takes you up there. Good, perfect. So these are really simple tools that you're all going to know how to use. You're all going to be experienced. This will become second nature to you. Once you find that reversal, you look at the first move up, buy in between the 61.8 and the 90 retrace. Okay, that's you put a box there, mark it up. Again, you then stick the Fibonacci, look for the extension, which all comes up here. Again, the next wave. So once you've got that wave 2 and it's held and it's valid, you can then move your stop loss right up to entry. There's risk-free trading. That'll be a wave 1 of 3, and then bang, up you go again. But that is pretty much, give ourselves a little tick for that, because again, no thought process, no news, no one else is telling us what to do. We're just going to get in robot-like rhythm, use these tools, and it will give you, a few hundred pip profit. Whatever you want to trade per pip is up to you, but very, very low risk, and it puts a really nice order into the charts and allows you to make money. So, right, I'm signing off now. Please, obviously, subscribe to our YouTube channel. Go to www.investor.co.uk. Like and comment, and obviously feel free to share it if it will help somebody that you know. And yeah, enjoy your weekends, and look forward to speaking to you on a webinar on Wednesday. Sorry, Sunday. Don't know where I'm getting that from. Sunday. It is definitely Sunday and not Wednesday. I'll see you on the webinar on Sunday.